Good morning, good afternoon, good evening, ladies and gentlemen, students and traders. My name is Tad Devon. I will be your host during today's weekly edition of the Analyst Briefing Room. Good to be back with each and every one of you. Happy Wednesday. What we're going to be doing today is looking for some scalping opportunities as we do in most of our briefing rooms. We're also going to talk a little bit more about utilizing trailing stops today. So I want to talk about that. I've mentioned that about every 2 months or so in the briefing room. So today we're going to talk about that. And we'll look for some scalping opportunities in the beginning, the first 30 minutes or so of our session. Then we're going to talk about utilizing trailing stops, how to utilize those, how to take advantage of those, and which really helps you to maximize your profit potential, especially when you're already in a position, how to lock in profit, not only just locking in profit, but setting it that the market keeps going in your direction. It continues to lock in more and more profit, so you don't have to worry about if the market pulls back, taking away the gains that you've already made, which I find very useful. Hello to you, Carrie. Thank you for those kind words. I love trading with everyone here as well. I'm excited to be here. We are still having students joining us right now, so I expect the class to grow by about double from where we're at right now, but we are going to go ahead and get started at this time. I will be uploading my workspaces at the end of today's session, so you have all of my charts, including my 15-minute workspaces. And good morning to you, Manish. Hello, Davis. And Davis has made money from your last briefing room. You're very welcome, and it's good to see you in here too, Davis. Hello, Clayton. Hello, Julian. For those that were having issues logging into the briefing room, I want to make sure everyone knows where to go now to access this. They made some changes to where to go to find it. A bit difficult. I couldn't even find it when they made that change. Let me pull up the online university so everyone knows where to go. So in the future, if anything changes, you'll know where you can go back into to log into the briefing room. So I'm pulling up my charts right now. My web browser. It's taking a little sluggish here. All right. So I have this. To access the briefing room, to go into it, you're going to go into Analyst on Demand. Just click on that link there. And after you log in, all right, and then give this a second to log in. And once you do that, on the bottom, you're going to see AOD Briefing Room, which can be found right here. So this is where you're going to go to access the briefing room sessions here, right there, AOD Briefing Room session. So if you ever can't find the link, this is where you're going to go, and this will give you access to the briefing room link, which is found here. So that's where the briefing room will be found for the future moving forward. So let's go ahead and take a look at the market here. Hopefully everyone's having a good week. I've been really busy. We just moved into a new house on Saturday. So it's just been never-ending sea of boxes and unpacking and installing things. Tonight I'm going to be hanging up my TV in the living room above the fireplace, and then I also want to hang up and mount the TV in my bedroom. Last night I installed two Ecobee smart home thermostats, which was very interesting because if you'd never heard of it before, it's a thermostat that allows you to connect to your smartphone and Alexa and all that stuff, and it regulates the temperature, and you can use Siri to control it, and knows when you're home and away, and it's actually pretty cool. So we have one in our upstairs and our downstairs, and I haven't really ever installed one of those before, so I thought I cut off the power to the AC unit, but when I was messing with the wires about to touch it, one of them sparked, and I'm just glad I didn't touch the live wire as I did that. So when I went to the second one, I made sure the whole side of the house power was turned off before I went and touched the wire again. I'm just glad I didn't get electrocuted. But yeah, it was interesting. So tonight I don't have to deal with electricity, so that's good. All right. Trish says, yes, good week so far, 378 pips of profit. That's fantastic. Congratulations on that. Gary says, really a shocking experience. You know, that was the one thing that made me so worried about doing this, was messing with the electricity, making sure it was off. And man, when that thing sparked right in front of my face, it scared the heck out of me. So then I was basically assembling the rest of it with almost all the power off in the house just to make sure. But I got it working. The direction said it would take about 20 to 30 minutes. First one took me over an hour. Second one took me about 20 minutes once I learned how to do it. But I'm really happy. So now in my bedroom, when my girlfriend, soon-to-be fiance Taylor, tells me that she's too cold or too warm, which happens a lot, I can just go on my phone or even just tell Siri to lower or raise the temperature, which is really great. So I don't have to get out of bed and go do that. Jeffrey said, should you change your name to Sparky? I would. Electricity always scares me with knowing whether it's off or on. But I'm glad I got that done. Yeah, and that's what I did. I turned off the circuit breaker. I thought I had it off on the wrong thing. So I turned off the AC unit, but not the power that controls it. And that was the issue. So then I made sure the next time when I did the second one that it was all off before doing so. It's kind of good to hire a professional electrician. You know, I consider myself very ambitious and like to do projects and things like that and figure things out on my own. So I didn't want to do that, and I read into it for a while and figured I could do it, and I did it. It was successful, almost shockingly, I guess you could say. Almost wasn't, but I was able to get it done, so I'm very happy about that. All right, so Anna says, I did that, but it took me to the previous session and said the session has ended, so I clicked on join the current session in progress, and that brought me to this. Okay, I'll have to make a note of that and let them know about that. All right. Sounds good. Yeah, I don't want to be electrocuted. All right, so let's go ahead and get started here. Let's take a look at our charts. All of my workspace are going to be available to you. All the currency pairs. The Dead Zone scalping ones are not going to be uploaded into the briefing room. Those are part of the Dead Zone scalping course, which I'll be launching on officially for the first full class on Tuesday next week on the 11th of April from 1 to 5 p.m. Eastern Time, which is short-term trading, scalping in the Dead Zone, several ways to do so with ongoing live sessions. So let's look at our 15-minute workspaces. So let me organize these for a second. Order alphabetically so we can have those in the top left corner. And let's look at our dollar pairs first, see what our dollar pairs are doing. Now, if you are new to the briefing room, I do upload all my workspaces. You can have access to all these, including the indicator group that I have on my charts. These indicators, for those who are not familiar, consist of the stochastic RSI down below at the bottom. We have 3 boxes. A gray box represents the 24-hour trading day, which goes from 5 p.m. Eastern Time to 4:59 p.m. Eastern Time the following day. We have the red box, which represents the dead zone, and the green box, which represents the active zone. Active zone is from 2 a.m. to 12 p.m. Eastern Time, and the dead zone is from 12 p.m. to 1:59 a.m. Eastern Time the following day. So to access these indicators and workspaces, you're going to go to Services, Downloads, and then the workspaces can be found under Briefing Room here. And then the custom indicator, if you want to add that to additional charts, can be found under the Indicators tab, also in the Briefing Room folder, which can be found right here. All right. Now, let's take a look and see what we have in store, if we have any scalping opportunities here this morning. We're going to talk scalping first, then we're going to talk trailing stops afterwards. So looking at my charts, what I'm looking for, and just so you know how I go about my morning when I'm active zone scalping is I'm looking at the stochastic RSI. This is the first thing I'm focusing on. I'm seeing where the RSI is in relation to the overbought and the oversold zone. So it's something you can do rather quickly. You can scan quickly through the workspaces and just look at where this is at in relation to the overbought and oversold. Ideally, we are interested in the RSI being either in the overbought or the oversold zone. And thanks for those words there, William, and you're saying use one hand. You know, I was actually doing that. I had my hand, just one hand on the wire, and the two wires had touched each other, and that's what caused the spark. But and that was my concern too, but I'm glad I didn't grab both of them. I was about to. So very lucky. All right, so first thing I'm doing is I'm looking at this. So what I can see here is Aussie dollar is oversold. Pound dollar is oversold. Euro dollar is basically oversold. Dollar yen is overbought. Kiwi dollar is oversold. Dollar CAD is in between. So dollar CAD right now, I'm going to put that one aside. That one is not really of interest at this moment. Another reason why it's not of interest is every Wednesday at 10:30 a.m. Eastern Time, with the exception of a few Wednesdays, the U.S. crude oil inventories comes out. It's a weekly fundamental announcement. That is really one of the only weekly reports that I see that can have a small impact in the market, or not as small. Sometimes that can be a medium-sized impact, but the market tends to have a little bit of an impact depending on the crude oil inventories difference when that comes out. So I'm going to pull it up so you can see that here. Crude oil inventories in the U.S. comes out every single week, usually at 10:30 a.m. Eastern Time. Every once in a while, it could be on a Thursday, but they're not expecting a big change. When you have a big difference from the forecast, that is when we tend to see the dollar CAD react to that. So Manish, you're asking about the euro dollar. We'll talk about that as we look at that because it is in a oversold position here. So as we see the market, the RSI is oversold on here. So let's take a look at what's going on. We're oversold. So the first thing I'm looking at is the RSI. Next thing I'm looking at is my actual range today. To do so, the blue indicator here, ATR1, which is blue, is supposed to measure our daily range. Every once in a while, it might read improper. I don't know why, but that's why I always like to measure just to make sure. So I'm measuring the high of the day, which is here, the low of the day, which was found here, and that tells me that we're at a 34 pip actual trading range. The average daily trading range for the euro dollar is 69.7 pips. So reading that ATR, the way you look at that, take the decimal, put it between the last two numbers, visualize that between the last two numbers, no matter what currency pair you're on, even the yen pairs, and that's going to read 69.7. Rounding that up would be at 70 pips. So rounding up would put us at a DTR of 70 pips. Average range, actual range, excuse me, is only 35 pips. Rounding that up, 34.7. So there's still room for this to go. It may not get its DTR today. I doubt it will. Based upon where we're at right now, we're approaching the end of the active zone, and we're sitting right here. So RSI is oversold. What I'd be looking for here is an aggressive trend line or a counter trend line to break and give me a signal that this is going to look to come up. Right now, all we have is an RSI oversold. We do not have a candlestick formation, and we do not have an aggressive or counter trend line. So what I'm going to do is I'm going to draw a counter trend line just like this. I'm going to draw it like that. You could go and draw one like this, but that's not going to do me a lot of good because the market's going to close above this here with just one candlestick, and it's going to be a break. And it could be a false break where it keeps on going down. There's no room for the market to really come up to give me a confirmation. So what I'm going to do is I'm going to draw it across my wick and body here. And I'm going to go in and make that red. It doesn't matter what color you have it, but I like to use my counter and aggressive trend lines as red. And then from here, I'm going to right click on this. And I'm going to go to add alert on trend line. So once I've done this, right click add alert on trend line, I can then go into my settings for how I want this alert to function. And I'm going to tell it that possible buy, this is a note to self, possible buy. My trigger is going to be on new candle. My frequency is always going to be once on this. I only want it to go off one time. When the market breaks through, that's all I need from that. I don't need it to be rearmed over and over again. So just that one time. All right, give me 1 second here. I have an email from some students trying to get into the briefing room, so let me just share that link. Give me 1 moment. Let me just send that out. All right, so from here, I have new candle selected. What new candle means is when the market breaks through the counter trend line, when it breaks it and closes above it, which is a counter trend line break, I'm going to look to buy. Only if and when that happens am I going to buy. The other option, which is new rate, means as soon as it touches it, an alert goes off. We want to have it on new candle. This is a confirmation of close. So I have this set up. I'm going to select save and run. And make sure you have send email selected. This is going to notify you when that happens. So if you're out and about, if you're not at your computer, you have send email selected. You can set up your cell phone also using an email SMS, which is down there. That will get you set up and ready to go. That'll get you set up. So what I'm going to do is I'm going to go down to below, and I'm going to show you how to get to this as well. I'm going to go down below, and I'm going to select save and run. So now what I did is I saved it, I ran it, and this is now an active link, an active alert. So no matter what happens, as long as the market comes up and breaks through, it is going to notify me when there's a potential buy opportunity. So notice how it's coming down right now. We're not interested in buying this unless it comes back up and breaks through. When that happens, and I'm going to show the box again, just give me 1 second. When that happens, my stop loss order is going to be 10 pips below the low where it broke. So if it broke right here and this becomes a low, my stop loss order would be 10 below that low. 10 below the low. That would be my stop. My limit order is going to be at a 1-to-1 risk-reward ratio plus an additional 5 pips. 1-to-1 plus an additional 5 pips. So I'd measure what my risk is. Give me 1 moment. Oops. All right, so I'm measuring what my risk is. And then I'm going to add additional 5 pips to my reward. So remember, I'm not getting in this now. This is just showing you how I'm planning out this position. Whatever my risk is, let's say this would be my risk, which would be only 17 pips. I would be going for 22 as my reward. So 17 risk, 22 reward if this broke and I entered right here. Right now, we're on standby. So how I got this alert once again is what I did was I drew a counter trend line or aggressive trend line across my highs, the wicks here in the body, coming down like that. I can extend that out a bit too, just in case it breaks further down. And then what I've done is you right click on the line, and you should get these options. If you right clicked and you get all those options, you didn't right click right on it. So make sure you right click on or near that line to get these options. And the option that I chose was add alert on trend line. That's what we're going into. So add alert on trend line. So when I got to this here, I made a name for it. So once I made a name for it here, one second. All right. I named this looking to buy. Trigger was new candle. And I went ahead and save and run for the option here. And now this is an active alert. This is an active alert which is enabled. So all I need to do is wait for the market to break through, and then I'm going to look to buy once that happens. Now, Alan, you're asking when my workspace is, what courses do you need to join to access my workspace on a daily basis rather than just weekly? My workspaces are uploaded daily in the Elite Trading Room on the weeks that I host that, which is every other week. So every other week, I'm uploading my workspaces. Every day when I'm hosting that every other week. And then I also upload my workspaces every Wednesday in the briefing room, regardless. All right, I have a question. Pat asks, are you just choosing your most recent high to draw your downtrend line, or do you go back to the highest point? Over here, this is the most recent high in this case here. So I'm using this high to draw it. I'm just looking at where the market is coming down in the retracement. So I'm identifying the current retracement or rally. In this case, it's a little bit of a rally because it's made a lower low. Took out this low here. So I'm identifying that as my counter aggressive trend line. So this is what I'm using to identify here. So that's what I'm using on here. This is my alert. And I'll show you on other currency pairs as I set that up, how to do that as well. Now, as far as how the alerts will notify you, the alert has to be running in order for, and on your computer, on your charts with it open, in order for the alert to go off. So if I put this alert on here, then I close out of my workspace, or I just turn my computer off, it's not going to signal me when it's time to enter. The alert needs to be running. It needs to have this active. You need to have internet connection in order for the alert to trigger to notify you when that happens. So right now, euro dollar is active pending a counter trend line. So it's active and pending a counter trend line break, waiting for that to take place. One second, I'm just checking on something here to answer the next question. I deleted my alert on the euro dollar, so let me go back to that for a second. I'm going to reactivate that, and I want to show you where these alerts go so you can see what alerts you have running. Possible buy, new candle, and save and run. So now that I have that alert active, to check your existing alerts, you're going to go up top to where it says charting on the top left corner. and then select alerts right here. So charting and then alerts. And then this will give you a list of your alerts. So this will give you a list of all your alerts. Here you have alert history, which will tell you a history of your other alerts as well. So this is my active alert. You can see here it's running, which means it's not stopped. If it had a green circle that said play, that means it's not active. So this is my alert list. I can go and edit alerts directly from the list when I have multiple ones, or just one. I can remove them all. I can stop them all. I can even go and open the chart from the selected alert to take a look at it. All right, Bill says, when I walk away from my computer, if I don't get back soon, it will say that I need to reset my charts. Does this mean I've lost connection to the alerts? Won't work. It says you reset. If you lose connection, if the connection is lost, then yeah, it can stop the ability for it to get the alerts. There's not data being populated in real time. It may not get that. You can always talk with our product support team. They can check and see what might be causing that to eliminate that issue from losing connection. All right, so euro dollar is pending. Let's look at some other currency pairs here. All right, Aussie dollar, US dollar is giving us a bullish candlestick formation. We have a stochastic RSI that's oversold. And if we take our alert here and draw a counter trend line down, well, let's see here. Right there, we haven't broken through it. But I can draw a more aggressive one here, which is going to give us a counter trend line break, which is right there. And you can see we're breaking through right now on the Aussie US dollar. We just got the candlestick to close, full-bodied bullish engulfing candle. This has a live buy on it right now. Our stop loss order would be 10 below the low. I'm going to confirm my 2 hour before I pull the trigger, so don't just go in right now. We're going to plan this out. Make sure I'm looking to buy. Stop 10 below the low, which would be at 75.56. All right, and then my limit is going to be a 1-to-1 plus an additional 5 pips. So let's use the ruler tool to measure. 19 pips going for 24 as my reward. That puts me at 7,600. All right, now let's look at the Aussie dollar, the full workspace, to see what that's showing us on here as the Aussie US dollar has come down. I need to adjust my downtrend line. Here, it's broken through this uptrend line. The market is pushing up. RSI is overbought on the 2 hour, oversold on the daily chart. So our 2 hours overbought, but right now it's oversold on the 15-minute. We're scalping, so we're looking for the market to come up. And the up AB has broken my inner, broken my outer trend line. It's at a deep 8-6 retracement. And this is coming up, perhaps coming up to past support, which is right in this area, acting as future resistance, which is there. That puts the market, if it comes up to that target, it's only about 12 to 13 pips away, so it's not that far away from that area. So we have to consider that when looking to buy. RSI overbought on the 2 hour, but the 15-minute is looking to come up. So let's go back to our 15-minute chart. Let's take a look at this here. All right. So on here, we have a good alignment. This is pushing up almost towards the high of the day on our Aussie US dollar. So I am going to go ahead and buy on this position. I'm going to buy this position. I like the alignment that we have. It's a short-term trade. I'm not too concerned about the 2-hour. Could this come down? Yes, it could. Could the market go up? Yes, it could. The market can do whatever it wants to do whenever it wants to do it. But I'm seeing a pattern alignment here. So what I'm going to look to do is I'm going to look to buy this at market coming up to 7,600 as my target. So I'm going to market buy. My stop 0.7556 and my limit is at 0.7600. Now once I pull the trigger on this position, oops, what did it do? Why did they do that? One second here. I have a new update to the charts. Let me pull on this one. All right. Once I pull the trigger on the position, we can see that I'm now active. Now, to view the actual spot where it took you in, on mine I have the view trades disabled on here, so it doesn't cause confusion in other classes that I'm hosting. Show open orders. All right, now notice here, this is where it actually took me in, because I'm on a bid chart. So when you buy, it actually takes you in at a higher price. The market needs to come up, however many pips the spread is, and cover that spread before you're at break even. So that's why it's actually showing a little bit down. I entered here, but it actually took me in right there. So when I look at this position, my actual risk is, I can't really see it. Let me bring this down a bit. My actual risk from entry is 24 pips. So I want to match that for my reward. That's why I typically do the +5, which compensates for that. And I'll go for 25 at 76.05 will be my target. So I'm going to take my limit. That's my plotted limit. This is my trade limit. And I'm going to bring this up to 76.05. Oops. And I'm going to confirm the change. And that's going to give me a true 1-to-1. Otherwise, you'd be going for a risk of 24 pips for a reward of about 20 pips. So that's going to give me a true 1-to-1 on here. So now I've taken the position long, I've bought, and I'm looking for this to come up on the Aussie US dollar. Any questions on that, on what I just did for this currency pair? Any questions on that buy position, how I was able to do that, how I modified that afterwards? All right, question is, will you set a trailing stop? I'm not going to set a trailing stop because I don't typically set trailing stops on scalping positions. It's very rare that I will do that. I have before, but the target is a small target, so it's not something I would need to do. Trailing stops are usually better placed when you're locking in profit, once you're already up, then locking it in, or if a fundamental announcement's about to come out and you're in a position, you're already active in it, changing your stop to trailing. So if it does go in your favor, it pushes your profits along fast. If it goes against you, well, you've already locked in and it comes down and takes you out with also profit gain. I have a question that says, can you try with the pound yen 1 hour chart? on there. We'll look at the pound yen. Alan, you're asking, is there a manual explaining these 15-minute charts and how to apply them? No, this is not a course for the briefing room. I use the briefing room to showcase different ways to trade the market. So there's not a manual for this. It's just a live trading session that I host every single week. So you can always come in here and watch the recordings to go back, but it is a live trading atmosphere, not a specific course. All right, so I have the Aussie dollar, US dollar. I've bought on that position. Look at the euro dollar. Look what this did. It spiked up right there, and that's why we have it on close beyond trend line, new candle, as opposed to new rate. New rate would have triggered right there, but new candle will only trigger when it closes above it. All right. Let's see what else we have here. Dollar yen is really overbought. So let's look at this. Dollar yen is very overbought. We'll look at the pound pairs next, and I want to go into trailing stops. We're all the way overbought. The market's come up. It's made a higher high, and it's trying to form an evening star on here. But there's still about 6 minutes to go before this closes to confirm that this does become an evening star. So what I'm looking at on the dollar yen is here I have an aggressive trend line break right there. I've drawn a trend line below my candlesticks in the angle of this rally, which is right there. And we can see we're breaking through this aggressive trend line. You can be conservative and draw a conservative one like this. But when I do that, I have to wait for the market to come all the way down to here before breaking through. And that's a ways away from where this is at right now. This is more aggressive on here. So this has a potential opportunity. So let's go and look at the dollar yen workspace and see what that's showing us. So I'm going to pull that up. Should be here towards the end. I wonder if I have it open. Thought I had this in alphabetical order. I don't see any of my dollar pairs up. Give me 1 second. Let me open my dollar pair. Oh, there it is. I think I'm just missing that one. I am. Let's look at the 2-hour. All right. So looking at my 2-hour chart here, the RSI is overbought. It's come down. It's in the overbought zone right now. We have a shooting star, a bearish shooting star forming on the 2-hour chart. This still has another 50 minutes or so to go before it closes. But this is a bearish candlestick formation as it is right now. The market made a lower low, pulled back. It's at a lower high currently. So looking here, this does have a potential for a sell. RSI overbought, daily is kind of flat. We're looking at a short-term scalping trade. So this does have a selling opportunity. I'm going to go back to my dollar again. And I'm going to plan out my trade on here. So I'm going to plan this out. What I'm going to do is put my entry right there at the close of the candle, waiting for it to close. My stop loss order will be 15 pips above this high. So right there, 111.58. And then my limit's going to be equal to my risk plus 5 pips. 34 risk, going for 39 reward. So 110.85 will be my target as of right now. All right. So this is what we're looking at right here. This is going to close in a few minutes, less than 2 minutes from now, and I'm going to take this position. So what we can do as we're waiting is we can plan this out. We have it planned. We're going to get our trade set up. I'm going to go into sell market. Stop loss order. We'll plot that 111.58. Limit will be 110.85. And all I'm waiting to do is confirm when that candlestick closes, and I'm ready to sell. So waiting for that to close. It's going to close here in less than a minute. To confirm that that does become an evening star, because I've seen an evening star turn into an indecision candlestick with seconds to spare. So we're going to wait for that to close. It's almost there. Just a second. It will close. All right. So we are, oops, I lost that. All right, there it is. All right, and this is going to close in just a second. All right, there we go. Boom. So I'm selling at the close. Sold at close, confirmed evening star on here. There's my position on the bearish trade on the dollar yen. One second, I'm just making a note here. All right, so I've taken that position, and I am shorting it on here. Fernando asked, did this form a bear crown on the dollar yen? If anyone wants to take a screenshot of that, feel free to do so before I switch the screen here. All right, so let's go to the dollar yen. Let's take a look. And yeah, if you look at this here, we do have a bear crown because it took out the A here. There's a bull crown into a bear crown. This was the bull crown right there. That failed. So you had a bull crown, but then you had the market coming up, and it's formed a bear crown, which is canceled out of the bull crown. So here we have a bear crown. Now look at the left tip of this too, which is right next, almost identical to the right tip. Identify the left tip, project the right tip, which is step 4 of the King's Crown rules. All right. Alrighty, so that is a crown. Now, if you take a look too, let's see here. I'm going to draw a trend line. I want to see if it's breaking. Let's see. There's our uptrend line break taking place there. So yeah, it's not at the back side. All right. Now, let's go look. I want to look at some of the yen pairs here. I want to talk about, I had a comment on the yen, and I want to talk about trailing stops. So let me go look at the euro yen and the pound yen. I know those were suggested multiple times in here. And if I have time, Pat, I'll show you the stochastic, or excuse me, I'll show you the King's Crown tool, how to use that. All right. All righty. So looking at the euro yen on here, here's my euro yen. This is where the 2-hour is, and notice how the RSI is overbought. The stochastic RSI is in the overbought zone. This is a 2-hour chart looking at a potential opportunity for a swing trade. Get rid of that. Thin this out a bit. Now, the market, whoa, I didn't want to do that, has hit the D extension of the King's Crown. There's the King's Crown right there in green. I have a crown Fibonacci drawn across manually from my A to the level of support that took out the up A, which was there. That's the crown. Then I have my regular Fibonacci's working my way down on this downtrend here, which is the smart fibs. So as we look at the euro yen, the market here has hit a, looks to be an 8.6, came very close to the 8.6. Just under it, so we're actually at a 7.86. We have a shooting star that's forming right now with an RSI that's overbought on the euro yen. Now, what I'm looking for is a selling opportunity, and this actually could be sold at market because it's at a 7.86. But I want to confirm with my daily chart, and then I'm going to look to place a trailing stop on this position. So let's look at my daily chart. All right. So on my daily chart, we've broken through this inner trend line here. The market has come down, nearing my outer trend line, which is here. Stochastic RSI is in the oversold zone. So that concerns me for looking for a future sell or a new sell, because this is down towards the bottom of our uptrend line. It's right near this area here. It's also at a little sub A, a very deep retracement. And today it's forming a bullish engulfing candlestick. It still has some hours to go before that closes, but as I'm looking at this right now, I may not want to sell this because it may not go down to the D and it could take out that A. It looks good, looks at a 7.86, which it is, but this could easily get broken as the market pulls back deeper. So this could easily come up, take out the 7.86 and 8.6 and A, and then crown, and then come up. So I don't want to do that on here. So I don't want to trade this for a sell because the market is near the uptrend line. It's near the uptrend line on the daily chart. If I go to my pound yen, so what I'm looking for now is a trade that I can place a trailing stop on. And I can show you placing a trailing stop from entry, and then we'll talk about modifying an active trade by turning it into a trailing stop. Give me 1 second here. All right. So let's look at our pound yen. Let's Let's look at the 2 hour. All right, looking at my 2 hour chart. The market is up here at a 5-hour retracement and is down AB. There it is right there. There's the old counter trend lines that I have on my chart. I'll clean that up. All right. We're at a 5-hour retracement. We're in a down AB. The RSI is in the overbought zone. And it's looking to come down. It's showing us overbought, looking to come down. So I actually have an active trade on here, which was on a buy. I'll show that here. So this is my active buy position right there. So let's say I want to go ahead, and I'm using this for a different system, so that's why this is active, but it's good to show for demonstration purposes. What I'm going to do is I'm going to go to my 15-minute chart so it's easier to see this. Let's turn on the trade so you can see. Whoops. Let me enable that so we can see the RSI. So over here, I'm going to take my stop loss order. I'm going to go into show orders info, right click, show orders info. And then from here, I'm going to modify this position. I'm going to modify this order. So I'm going to right click and modify that order. Oh, it's doing something weird. Oh, wait a minute. There we go. Okay. So I'm going to modify this order. So I'm going to take my stop loss order and I'm going to bring that to break even. So my entry, my open price is right there, 137.84. So 137.84 is my stop. So there's my stop. I'm going to bring that to break even. Then what I'm going to do is I'm going to go to where it says SL trailing, which is here, and I'm going to change this to dynamic. You have fixed and you have dynamic. Let me explain what those do. And let me put on dynamic so you can see that move as I do that. So I'm going to put dynamic. I'm not going to use a limit because it doesn't let you use a limit when you use trailing stops. So now that I've enabled that, I want you to see as I'm talking about this, see if we can get this to move coming up. So going back into that, now that I've enabled that, modify order after I'm in the position. A dynamic trailing stop will move up pip for pip as the market goes in your favor. So from the time you activate that, when the market goes up, your dynamic trailing stop moves up with it. If the market comes down against you, the dynamic trailing stop stays put. It does not go backwards. It does not budge and go the other way when the market goes the other way. It only moves with the market. So an example of that would be this. If I drew a box here, and this is where the market's currently at, there's my stop. So let me just color that red. All right. So this is where the market's at. Notice how my stop is right there. If the market goes up from where it's at right now, picture this like a ceiling where the market is inside of this box. If the market goes up, the box moves with it. It drags it up. So as the market comes up, it's going to push this up and my stop loss order is going to move with it. But if the market comes back down, my stop loss order stays there. It never comes further down. So as the market goes up more, your stop moves with it. The higher the market goes, the more your stop moves. The only way it's going to take you out is if the market comes down and hits that level. That's what you're going to see with a dynamic trailing stop. A fixed trailing stop is going to move in increments. So let me show you how that would look here on a demonstration if we were trading the pound yen on this recent uptrend using a trailing stop. And I'm going to show you both ways. All right, so let's say we went ahead and bought this Morningstar right there. So we're going to go and buy a Morningstar. So I entered the position there. My stop is 10 below the low. Which is there. Now, I'm not using a limit. I do not have a limit when I'm using trailing stops. If I had a limit from an original trade, I could then go and change it to a trailing, and it would turn off that limit there. So on here, there is my risk. Make that red. Now, if I'm using a dynamic stop, this is what is going to happen. Whenever the market goes up, it drags my stop with it. So then my stop is right there. It goes up again, my stop is here. So now my stop is there. Now notice how this next candle comes down, but my stop stays put. Only when it goes higher than the highest point does your stop get dragged up. Oh, we got an alert. What is it here? I have an RSI alert. Possible buy, so let's look at that here in just a second. So on here, my stop is still in play. All right, it comes up. Now my stop moves up again. So now I've locked in profit from here to here. Worst case scenario, I'm walking away with 23 pips. All right, it goes up a little bit more. Stop comes up. Now it stays here. Now it goes up. Stop comes up. When you're using a trailing stop, if you do use it and you had a limit before, it'll say limit none. It will cancel the limit. It'll change the limit. It'll put it at none for your broker. Comes up again. Stop moves up. Now, look at this. It broke out bullish a lot, so this comes all the way up. Now, if during this candlestick the market was up and then it came back down, it would have taken us out. I don't have any way of knowing what it did during this period without going to a 1-minute chart. But let's just say it didn't come back down after coming up, so my stop is here. Now, this would have taken us out because that has a range from there to there. So this would have taken us out depending on where this wick hit in this area here. But we've already locked in profit of 88 pips. Now, this broke out bullish and this was able to take profit like that. I would not recommend using a trailing stop with a small amount of pips, basically of wiggle room. You can say 34 pips was how much room I gave it to move. Trailing stops are good when you can allow the market to have some room to come back and test without stopping you out. But this is an example of how a trailing stop would work when I used it dynamically. Now the other option I can use would be a fixed trailing stop. So let's bring this back to the entry. So the next one we're going to look at, I don't know why it's doing that to me, would be a fixed. So a fixed trailing stop is only going to move in increments that you preset. So what that means is this. Let me get this back to where I want it. All right. And I'm going to go ahead and label and put these on the chart. These are my tiers. So this is how this would work. If I had a trade and I went ahead and bought, and I went into my stop loss, and I go to my stop, and I set this at fixed. In this case, my stop is 34 pips from my entry. So I would go to fixed, 34 pips. Whoops, 34. 34 pip fixed trailing stop. I would put my actual stop number in there at 137.64. And then a fixed increment of 34. Now you can do that in 20 pip increments, 5 pip increments, 10 pip increments, however you'd like for the increments. I usually use about 20 pips as a default for my increments. But let's just use it this way because it's already set on the computer. And then I'd hit OK. Typically, I'll use 20 as a default to lock in along the way. So what's going to happen here is this. When I enter the position, the market comes up, it hits that first tier target right there. So when it gets to that level, my stop loss order moves up. So my stop moves up, so now my risk is break even. Worst case scenario, I'm walking away at break even. Now, the market still sitting here, so worst case scenario, it comes down on break even still. Now it hits this tier. So then my stop loss moves up to here. So now I've locked in worst case scenario, the 34 pips right there. It only moves up in tiers. So it has to hit that level before moving up to the next one, which I find using fixed trailing stops from entries better than dynamic trailing stops from entries. When I'm entering the market, if I'm going to use a trailing stop right off the get-go, I will use a fixed. Mostly. There is every once in a while I'll use a dynamic, just depending on the situation, but usually it will be fixed when I do use trailing stops. Now, we're in the next tier, locking in 34 pips of profit. Well, we hit the next tier. So here, we've locked in 34. And if you recall, this candlestick right there took us out on the dynamic. That right there took us out on the dynamic. But on our fixed, we're still in because it didn't come down to here. Remember, fixed only moves in those increments that you set. So on here, we're still live. Now the next tier is going to be over here. All right, so here we are, giving it room. Let's push this over. Still hasn't taken us out. It's come down a bit. That's our stop at the bottom of the red box. All right, we hit our next target right there. It broke out. So our stop moves up again. Let me see here. Did we hit our target? I think it slipped on me. There we are. Okay. So our stop now moves up again to here. So now we're going for the next tier target. So let's see. Still moving along. Boom. Next tier target is hit. So we've come up to that target. Our stop moves up again. Now remember, we got stopped out over there on the dynamic, but this is still going. So we've hit that target. Now we've hit this target. Almost at that target. Let's see. Did it hit it? Yep, now it hit it. All right. So now we're in the next tier. Now look at all the profit this is capturing all along the way, and it's locking it in as the market keeps on going up. Now, eventually, it takes us out. Right there, it came down and stopped us out. So let's back this up. There was our entry, originally right there. That's where we got in on that position. So by using a fixed trailing stop, we were able to take profit of 170 pips. 170 pips on that breakout, because that locked in profit as the market went up in those increments. Dynamic got stopped out on this little whip right there, as I call it, where it whips up and down on that spike. But our fixed was able to keep on locking in profit along the way. So I had a question. So is fixed better than dynamic? Fixed is better than dynamic, in my opinion, when entering off in the beginning. From when if you're going to use a trailing stop from an entry, a fixed trailing stop is good to use. I recommend using fixed trailing stops below the A. If you're going to do that, put it below the A and let the market come up. 618 retracements are great places to use trailing stops. But don't use a trailing stop entering below a shallow C, because the market could easily retrace deeper and you're not giving it much room to do so by using a fixed trailing stop. But that's how we are able to do that. That's how we're able to do that. Now, I want to next week talk more about that, because it is such an interesting way to trade the market, and there's not a lot taught on that. So I do like to use our sessions here to go over that every once in a while. So I want to look at my alert. I had the possible buy alert that went off on here. So I'm going to go to that. All right. So there's our dollar yen coming down. Let me look at, what was this? There is the euro dollar. So we got an alert. It came up. It's above it right now. So it's broken through it. The RSI is oversold. It's coming up. Euro dollar doesn't have a candlestick formation on here. But we do have the candlestick looking to close above it on there. So this is almost where I was looking for this to enter. So we do have that position. When this closes bullish, I'm going to look to buy. My stop loss order is going to be 10 below this low. So 46, 106.46 is my stop. My risk, wherever this closes at, is going to be about 20 pips, going for 25 reward. So my target's going to be up here at, it's off the screen, 106.91. So 106.91 is going to be my target. For a euro dollar buy position. 106.91. That was just a test there. That was at a 10 a.m. open. So not too concerned about that wick. So this is going to be that trade if you want to take a screenshot of this as I'm about to wrap up our session here today. No worries there, Robert. Can't complain with getting a little extra sleep every now and then. I know I sure miss getting some sleep. I've been just going non-stop. When I leave the office, going home, busy at work, busy at home. So sleep is a valuable commodity these days for me. All right. So there is the euro dollar position. So to recap, I'm in on 3 positions here today. Aussie dollar, US dollar, for those that joined late, is a buy. Was a buy position right here. Aussie US dollar was a buy. Euro US dollar is a buy. And then the dollar yen over here is a sell. So dollar yen's a sell. You can see the trade information right there. Pound dollar is not an active position. I'm using that trade is from something else. Dollar yen active sell. Euro dollar is going to be an active buy. And Aussie US dollar is also an active buy. All right. So that is going to conclude our briefing room session for this week. Next week, I want to talk more about trailing stops. I want to look at setting up some swing entries next week on our briefing room. So looking at swing trading with trailing stops, looking for those good retracements, good 618, 786 entries, in setting trailing stops and just letting our profits run. How to just let the market keep on coming up or down, being for bullish or bearish, and locking in profit along the way, which is really good for trend breakouts. When the market breaks out in trends, you can keep on capitalizing on your gains by using these trailing stops. I did record this session. I'm going to get it over to our video developer uploader guy here in just a few minutes, so hopefully you can have that posted today. The videos are found, so everyone knows where to go to find those. In the video archive section. Davis, you're asking, how do you follow me on a daily basis? My schedule varies from week to week. The constant is always the briefing room on Wednesdays. I host the Elite Trading Room every other week, Monday through Thursday, from 1 to 3 p.m. Eastern Time. I also host the Dead Zone Scalping course, which is my brand new course launched last week. I'll be hosting 3 sessions a week of live trading coming up in that as well as additional courses. But to access the briefing room on here, go to this link. This is where the recordings are stored. This is where you can find the links to that. You're going to find today's up there. Hopefully by the end of the day, I'm going to push to get that uploaded as soon as possible. I'll have to ask them where the other videos are as well to find out about that. Yeah, dollar yen, dollar CAD, this is why we stayed out of that position, because we had crude oil inventories that came out, and if we look at what happened, crude oil inventory is 1.6 million, surplus, much more than they expected, so that caused the dollar to spike up against the CAD. All right, that is a wrap on our briefing room. Hopefully everyone enjoyed it, learned something new today. Come back, see me next week, because we're going to talk more about using trailing stops, looking at swing trades, looking at placing longer-term positions, and looking to capitalize on those gains. Everyone have a great rest of the week. Good day. Happy Wednesday. I'll talk to everyone next time. Until then, take care.